Investors piling into European stocks in 2025, with our next guest calling it the equity trade of the year. But now, is it a little too crowded? Joining us to discuss more, I want to bring in Maria Vatemoney. She is the State Street Global Markets Head of Equity Research. Maria, great to have you with us this morning. Appreciate you making the time. Is the EU trade already overcrowded?
Yes, hello. Yeah, very pleased to be here. According to our data, yes, it is. Institutional investors started the year with big underweight in European stocks. We saw a lot of money going in, and now positions are above benchmark. So yes, definitely big positions there, huge expectations.
And talk to me too about which areas of the trade are too overcrowded right now. I know there are a couple of areas in Europe in particular that look really overbought.
Yeah, no, that's a really interesting point. So what investors have been buying in Europe, it's really two sectors. One is banks and the other is defense stocks. So that's pretty much the only positions that investors have in those areas. Arguably, they are the most kind of richly valued. And like investors rotating out of US into Europe is really not going and buying like those cheap undervalued areas that we kind of hoped for. Investors went and bought very specific areas, banks and defense.
And we also still have Bob Lane on set with us. Bob, I want to know from your perspective and from the technicals perspective, is the Europe trade overdone at this point?
I think it is, and Maddie, relative strength is extremely high right now with European stocks. Across the board, look at Germany, France, England, and so forth. Some of these companies have reached levels that they hadn't seen in a couple of years, and that's generally that's a bullish sign. But when we do get a little bit overcrowded, we get a little bit too much money coming into these names, it's time to pull back a little bit. And I think that most people are going to look into taking money off the table here and probably putting that money to work, maybe here in the United States or else in Asia.
Yeah, well, let's talk about that with you, Maria. I want to bring you back into the conversation. What are some areas that are perhaps oversold right now that investors are not paying attention to that could be good opportunities?
I mean, first of all, I would like to kind of echo the point that your previous guest made, is that we are already seeing institutional investors selling European banks. So one of those areas that is very crowded, where stocks are at extremely high levels, investors begin to sell. So that's already beginning to happen. In terms of where they're putting money in, I think one really interesting area is US healthcare. So that's the sector that is really have very low investor positioning. It underperformed very much. There are some challenging fundamentals backdrop, but now it's beginning to catch investors' attention. It's strong kind of cash flow profile. So we find that very, very interesting.
And talk to me, Maria, as well about the fact that there's just such a fall off in consumer confidence in the United States right now. We have Neil Kashkari just now saying tariffs are creating a dramatic shift in confidence for investors who are just afraid of the U.S. volatility right now, but they're hearing you say Europe might be overcrowded. Are there other emerging markets they should be looking into?
Yeah, no, I think that's a really interesting point. On consumer side, I think there is some kind of contrast between consumer confidence and actual spending. So that potentially something to kind of dig into it a little bit more. So consumers are worried about the potential uncertainty, tariffs, layoffs, slowdown, but actually they're still spending. And that's generally true. We see hard data is still kind of surprising on upside, while soft data surveys are a lot weaker. But in terms of rotation, as I said, healthcare look very interesting. I mean, we're increasingly looking into China. So China is one place where government is really, really trying to stimulate domestic economy. And we are in the kind of our data on online inflation, beginning to see some signs of consumer beginning to spend. And again, obviously, investors start from a huge underweight position. So there is potential for better performance.
Maria, we've often seen that European stocks tend to follow the lead of the United States over a period of months. And more recently, we've seen some good strength in the U.S. stocks in financials, brokerages, so forth, names like J.P. Morgan, Goldman Sachs, Wells Fargo, Citigroup, and that sort of group. So are we going to see more of that happening in Europe with some of the bigger European banks like a Deutsche Bank and others following the U.S. lead with strong financials?
I mean, that's definitely has been happening already in Europe. So European financials were like by far the best performing sector this year and last year. So valuations have definitely increased, positioning has definitely increased, and underlying fundamental are quite strong in European banks. I mean, I can keep joking that it took Europe for like a good 15 years to kind of recover from financial crisis, but European banks currently are in a very, very healthy state. My concern is valuation. My concern is huge investor positioning. So like a lot of very good news for European financials, kind of in the price already. So to me, it's quite logical to kind of risk reward is in the downside there already.
Maria, amid all of what you have spoken about and just the areas of the market that do look a little bit overbought, how are you viewing U.S. tech?
U.S. tech, so that's my long-term love. So I have to admit that. So we love tech for long periods of time, for last maybe decades. So it used to be beta, it used to be growth, it used to be cyclical, long duration. And for now, right now, what we really like tech for is quality factors. So it's very low leverage, it's very stable earnings, it's great cash flows, high margins, high return on equity. So those things to us is really, really important to emphasize in periods of kind of uncertainty and instability, and particularly given that investors have really adjusted their positioning. So now holdings, kind of our measure of investor holdings relative to benchmark are about half of what they used to be at the start of the year. So to us, it's definitely good to like buy the dip opportunity.
All right, Maria, buy the dip on tech. Thank you so much for joining us. Appreciate it.